Hello, everyone. Thank you so much for joining us, and we hope you're all doing well and staying safe during these difficult times. Good morning, good afternoon, and good evening, everyone, depending on where you are. My name is Ruchi Soni, and I'm the Program Manager at Sustainable Energy for All. It's my pleasure to welcome you all for the launch of this flagship product from the Mini-Grids Partnership, which is a State of the Global Mini-Grids Market Report 2020. The ethos of this report really lies in bringing together data from several stakeholders and presenting this one-stop shop for the latest trends and information that you may seek out for the mini-grid sector. We at SE4All are absolutely delighted to be hosting this Power Pack launch event today on behalf of the partnership. If the registration numbers are any indication of interest in this event, we've had a tremendous response of over 700 people registered for the event. Many thanks and welcome to everyone who's joined us today. We're expected to go over 2 hours today, and we very much appreciate you taking out the time to participate in this important discussion. I now have the pleasure of introducing Ethan Zindler, Head of Americas at Bloomberg New Energy Finance, a provider of insight, data, and news on energy and other topics such as advanced transportation and emerging technologies. Ethan manages analyst and commercial teams in the US and Sao Paulo, while also overseeing Climate Scope, a project profiling clean energy conditions in developing countries. Ethan's past experience includes a stint at the White House, the Cape Cod Times, and MTV. Ethan is also the Senior Associate at the Center for Strategic and International Studies, Energy, and National Security Program. Welcome, Ethan. The floor is yours.
Thank you, Rishi, and thank you so much for your partnership and collaboration with us on this project, which is something I think we are all enormously proud to have been a part of. I'm going to just talk for just a couple moments and then we'll get on with the real experts in this conversation. But before I do, of course, thanks to SE4All and to the Mini-Grids Partnership and to Rushi in particular and to Damiola and others for collaborating. And this project truly is a collaboration in terms of the number of stakeholders who contributed their insights to make it possible, and it certainly wouldn't have been we wouldn't have been able to do so without all of you. When we undertook this project about a year ago, I think none of us would have assumed that we would be sitting up in here, in my case, in my attic, talking to you over video. But I do think one of the great advantages of being able to do it this way is that we can make it so global and have so many people on from around the world who did have something to do with this project. Just really quickly, before I go on much further, for those of you who don't know Bloomberg NEF, we are a division of Bloomberg that provides energy research primarily focused on the so-called new energy technologies, but also on how existing technologies are changing to keep pace with the low carbon world. I've been the director of the project called Climate Scope for about 7 years now, excuse me, that focuses on emerging markets and the clean energy market conditions there. That project, which is at globalclimatescope.org, has been funded by DFID and others, and thanks to them, that gave us some of the basis of the knowledge that we've used in this project. I do want to just quickly say also that I'm incredibly humbled to have been able to play a small role in editing this report, but the real champions you're going to hear from in a moment are Takehiro Kawahara, Ulme Ezekiel, Amar Vazdev, Antoine Vanier-Jones, Michael Wilshire, Vandana, but this is really a collective effort of all of Bloomberg NEF in many ways, and so very grateful for our team and all the hard work that they put on this. At Bloomberg NEF, we really try to take an approach to looking at clean energy from a private sector perspective, and I think we tried to bring that to this project. We tried to think long and hard about what the actual economics are of mini-grids and where they're going and what the opportunity really is. Along those lines, you're going to hear a lot about the data that we collected in terms of what's gone on in the market to date, what the cost competitiveness is of the technologies, and what the size of the potential market is overall. If we look back on the last 10 years or so, I think we've seen two really pretty remarkable trends. First, when it comes to renewable energy technologies, the costs have dropped very, very dramatically. In the case of solar photovoltaics in particular, a cost of a typical module now compared to about 10 years ago is easily 90% cheaper than it was a decade ago. And concurrently, we've seen a really rapid growth in energy access, with the numbers going from well over 1 billion to a bit under 1 billion in that time. Now, I'm the first to know that correlation is not causation, and a good number of people have come online, frankly, because grids have been expanded to where they live. But I do think it's worth noting that distributed solar in particular, along with storage, has played a greater role. And mini grids in particular have also played a very important role within that. And as you'll hear from my colleagues, we've tracked about 7,200 projects around the world that are essentially, for the most part, clean mini grids that are out there. And today, as we speak, I mean, by the moment, there are literally people every moment and every day gaining energy access through distributed solar in new and interesting ways that frankly are very hard to even keep track of because it's happening very organically in a very exciting way. So that's all the great news. And I think the report does a good job of characterizing all of that, but it does of course raise some real questions too. So if we're saying that mini grids are effectively economically competitive now, and we do think that's the case in a number of markets, and what we also do is track the amount of money that's been pledged to go into mini grids, and that's over $2 billion. Then the question is, why aren't we seeing more activity? And what can be done to trigger more activity? What changes, what recommendations can we make that can accelerate all of this? And of course, there's the further complication of us being in the midst of a global pandemic now. So I hope that sets up a bit of a cliffhanger and that my colleagues can answer through their brilliant work that was done with Rushi and others in our partnership. And I would just want to say thanks so much again for this great opportunity and hand the floor back to you, Rushi.
Thank you so much, Ethan, for those inspiring words. And we definitely look forward to diving into the highlights from the report. I would now like to kick us off with an introduction to the Mini Grids Partnership. So the Mini Grids Partnership, or the MGP, is a consortium of over 330 mini grid stakeholders with the common goal of enhancing and complementing each other's work through greater collaboration and coordination. It serves as this umbrella group to bridge different stakeholders and initiatives, especially those from the industry, the government, and investors and donor community. In a nutshell, the MGP, or the Mini Grids Partnership, offers the market infrastructure for the mini grid sector. In terms of our activities, the MGP convenes a global network, hosts working groups and regular calls with the steering committee members, and events with the partnership members. The partnership also hosts knowledge sharing services such as the industry newsletter and webinars. SE for All, along with ARE, serves as the secretariat for the partnership, and I would strongly encourage you to check out our website at minigrids.org. Can we move to the next slide, please? So to speak to the genesis of this report, so how did this report come about? The genesis for this work is from a Mini Grids Partnership meeting, now almost 2 years ago, at an SE for All forum in 2018, where the usual issues of lack of replicable business models, unfavorable policy and regulatory landscape, lack of financing in the sector came up. But something that also came up consistently was the lack of data and market intelligence in the sector, which is unfortunately unique to the sector. It was also evident that the investment in these mini grids, the clean energy mini grids, was still small, in large part due to this lack of information. The whole exercise of developing the State of the Mini Grids market report hinged on the fact that we need to address this lack of market intelligence, sector knowledge and data, and bring it together in one place where we can all stand behind it. The MGP, as a neutral coalition of the sector, commissioned this report to Bloomberg New Energy Finance to draw together this dispersed information into a unified and comprehensive view of the entire market. Our hope from this report is for this to serve as the go-to source of information on current mini grid trends, market status for investors, industry members, policymakers, and other stakeholders. We also have 6 country case studies for Uganda, Tanzania, Nigeria, India, Philippines, and Indonesia, which I hope you'll check out. Next slide, please. In developing this work, we relied heavily on our involvement with the Mini Grid Partnership members, which is in fact all of you, and months of listening intently and interviewing several stakeholders in the government, private sector, and the donor community on what is needed and what really works. We're also very excited to share the first ever open source database for mini grids, covering over 7,000 projects in countries in Asia, Sub-Saharan Africa, and island nations. Our hope with this database is for this to be this publicly information base available to everyone on existing and pipeline mini grid portfolios, including information on geography, ownership, technology, generation capacity, to name a few categories. I also want to acknowledge upfront the critical support we've received from Bloomberg New Energy Finance for the data gathering, research, and analysis. Lastly, before handing it over to Takehiro, just a quick note on the event process. Following the presentation on the report highlights, we will have a short question and answer session where the panelists will address questions submitted by the audience. This event is being recorded, and we will share the recording and the presentation with you afterwards. Also, if you'd like to ask any question during the session, and we really encourage that you do, please type it out in the question and answer interface box at the bottom of the screen. Thank you again for joining us, and over to you, Take.
Thank you very much introduction, Ruchi. So my name is Takehiro. I'm an analyst in Frontier Power team at Bloomberg NEF, and also manage the research project on the mini-grids. I'd like to quickly introduce my colleagues who are going to speak. Firstly, Amar Vazdev, who covered market trends, technologies, and also focus on the 4 case studies analysis in this research. And also, Uime Ezekiel is going to speak. He focused on economics analysis, financing, and also the case study on Nigeria. I'd like to hand over to Amar Vazdev first, who's going to highlight some of the key findings.
Thank you very much, Take. If we could move on to the first point, that'd be great, thank you. So this first point was taken from the Outlook section of the report, and we assessed the addressable market size based on income level, population density, and population growth. And what we found was that mini-grids can serve 111 million households, which would be the most out of the studied approaches that we looked at, so solar home systems, grid extensions, and mini-grids. And mini-grids would capture 47% of the total number of households. In turn, this would require around $128 billion of investment, as you can see on the right-hand chart. And most of this would be flowing into sub-Saharan Africa and Asia. And this is in order to achieve the UN Sustainable Development Goal number 7. If we could move on to the next point, thank you. So as Richie mentioned, we captured some 7,000 projects in our database. And what we found was that around 5,500 of those projects were operating specifically for energy access purposes. Within Asia, we found Indonesia and India to be leading the way. And within Indonesia, the vast number of projects were built with support from NDEV. And within sub-Saharan Africa, which had about 40% of the market that we identified, on a capacity basis, Tanzania did very well in the region, and that's due to the government setting up a supportive regulatory framework very early on relative to other countries within the region. Looking at the technology trends on the next slide, we can see that on the left-hand side, that shows the cumulative number of mini-grids installed. And as you can see, from 2013 up to 2019, the sector has had quite good growth overall, almost more than doubling in those 6 years. But one of the more interesting points is if you take a look at the middle chart, you can see that solar has really penetrated the sector. That includes pure solar systems and solar hybrid systems, i.e. those that are using diesel generators or batteries. And as a proportion of the installed projects in 2009, solar took about 10% of the market. But by 2019, 10 years later, we saw that this was around 55%, so a more than 5-fold increase. And we expect that trend to continue. As you can see on the right-hand side, here you can see the penetration of lithium ion in a similar manner to what we were seeing with solar systems. So starting in 2015, no projects installed lithium ion. But 4 years later in 2019, of projects including storage, lithium ion was approximately 1/3, including 1/3 of those projects. And so we see that the mini-grid sector is really waiting for that tipping point with lithium ion batteries. And that was something that was reflected in our conversation with developers when we interviewed them. So the developer sentiment is positive overall, but it's just about the price reduction that we'll probably see with through utility scale and the automotive sector. And the final point from me is on the corporates entering the sector. So as you can see on this slide, we've seen a large variety of players entering the market in a number of ways. So some through mergers, some through acquisitions. We've seen some partnerships, and also equity finance being provided as well. So, for example, industrials have entered the sector as a means to provide control systems and also offering turnkey mini-grid development solutions. And I would like to now hand over to Ulame to cover the economics and financing findings.
Thank you, Emma. Okay, so this chart shows the approved and dispersed financing in the mini-grid sector based on data collected by the mini-grids funders group. To date, just 14 financiers of the group have approved a total of just over $2 billion as of February 2020, but only $297 million, i.e. only 13% of the approved financing has been dispersed, which raises questions, right? Of course it does. Although the reality may look slightly better because due to the lack of data, I mean, there's still lots of data to be collected in the sector, and this is the best data you can find at the moment, publicly available. But this also suggests that there can be significant delays in getting funding and projects moving forward in the sector. What's the possible reasons, you may ask? Well, for example, there's not enough potential fund receivers who can use the funds effectively since the market is still relatively immature. Or it could even be due to the complex and lengthy procurement processes of host governments in this sector. If you move to the next slide. So this chart, or these two charts, the chart on the left shows which financiers have approved financing for mini-grids, so broken down by name. And as you can see, the World Bank, followed by the European donor agencies, are the major financiers so far in the sector. And the chart on the right-hand side has been broken down by country. And if you look at the chart, it shows that some 66% of the financing approved has been concentrated on only 10 markets, with Nigeria, Kenya, and Pakistan being the top 3 of those fund receivers. I mean, it's also important to note on this slide that these funds are typically issued to host governments and not directly to project developers. So if we move to the next slide. So this diagram shows selected financiers in the mini-grid sector for electricity access. You've got public financiers, foundation and impact investors, and they have been the most active financiers in the sector today. This includes lenders who have provided loans for governments to build mini-grids. So the strategic investor category, as you can see at the top right-hand side of the chart, has been broadened since 2018 and includes utilities, oil majors, and Japanese trading houses. They usually target developers with a good track record of project development. So they're more likely to lend to you if you have good track record. So the most scarce yet desired segment is the commercial financiers, and that is second to the right-hand side. As you can see, there's not much activity there. However, from direct interviews, commercial financiers have informed Bloomberg NEF that they'd be more willing to lend should low-risk public financing be available, i.e. developers have already secured public funds such as results-based financing, RBF, or some other government-backed grants. We move to the next slide. So here, we analyze the levelized cost of electricity for the 6 case study countries. And we see this as a useful benchmark on looking at and comparing energy economics amongst different technology configurations and geographies. So what the chart does, it compares the LCOE, the levelized cost of electricity, by technology configuration, geography, and with or without productive use customers. Productive use customers being maybe someone that's running a sugar mill And we know that they're going to be using that power all day. Predictable load profile. If you look at the chart, you can see isolated mini-grids, grid-connected mini-grids, and so on. So the x-axis is the cost of electricity, and the y-axis shows the different technology combinations. So as you can see, the most expensive of all of these technologies on that chart is diesel, and then the least is PV plus storage, right? Because PV is cheap today. We found that adding solar and battery storage reduces the run hours of the most expensive source of power, which I just mentioned is the diesel genset. And hence it reduces the fuel consumption and therefore lowers the LCOE in all scenarios. We also find that the existence of the productive use users makes a huge difference on the levelized cost of electricity, as the slide title implies. It reduces it by 39 to 50%, which is really cool, right? So the LCOEs can be, one thing to note is that the LCOEs can be very different by project, even in the same country. So that's an important point to make. And it really does depend on customer type, their power demand, geography, fuel consumption, fuel cost, and where the households are located within a community. So if we move to the next slide. So what this chart shows is, it shows the capital expenditure, the CapEx breakdown for mini-grids in sub-Saharan Africa. So that's basically the investment cost, right? How much does it cost to build a mini-grid? And this data was collected by AMDA and the ECA. It's not surprising that the generation, which is the yellow component of the chart, is the largest. But however, it shows how distribution infrastructure can make the CapEx higher, especially in sub-Saharan Africa, where rural households tend to be scattered quite often. For example, like in Nigeria, you get that happening in the villages, say. And as you can see from the chart, site development costs make up around 12% of CapEx, which suggests that streamlining the process, including, say, site identification, community engagement, and licensing, is important to reduce the overall cost component. Although not huge, the chart, it could also be to lack of data slightly here. The chart also shows that the VAT and import duty exemptions for energy equipment could also reduce the CapEx significantly. And I will now hand you back to Take.
Thank you. Average revenue user, or called ARPU, is an important indicator to measure economic performance of a mini-grid. Higher ARPU means that mini-grid operator can gain higher economic returns, which is also important when developers seek for investments. ARPU hinges on 2 points. One is how much electricity consumers use, and also the second is how much consumers pay per kilowatt hour, kilowatt, or energy services they receive. Evidence that AMDA and ECA collected from developers in sub-Saharan Africa show that for solar hybrid mini-grids, the higher the utilization rate becomes, the higher ARPU mini-grid project tends to achieve. It means that economic performance is better if the power demand profile is closer to the generation curve of solar hybrid mini-grids, which also suggests that it is very critical that productive use of electricity is involved in mini-grid projects. Please go to the next slide, please. In reality, it is easy to say, but it is hard to do. So some developers have innovated the business models to stimulate the consumers to use more electricity to improve utilization of mini-grids. This diagram shows 3 business model types to stimulate productive use of mini-grids electricity. In this model, probably the most sophisticated model is that supplier off-taker model, or it is called key maker model. In this model, a developer itself becomes off-taker and uses equipment that needs high power output. For example, Jumeme is one of the developers in Tanzania, uses mini-grid electricity to process raw materials procured from the local community and then sells the final products to the market outside. In this way, the mini-grid project with the productive use is not only contributing to improving the revenue generation, but also it can contribute to local economy that mini-grid is located. To have innovative business models, it is important that governments set up regulations that allow flexible tariff settings or remove regulatory hurdles. Please go to the next slide. Today, many governments in emerging countries limit power prices to protect rural customers. The chart here shows only 11 countries surveyed allowed mini-grids to set cost-reflective tariffs. But even so, true cost of solar hybrid mini-grids is generally expensive for many of the rural customers. So subsidies are still required in many cases, or most cases. What is important here is that governments allow developers to have flexibility for tariff setting. It is also important to note that subsidies can also be used for tariffs, not just CapEx. One of the past research by Cross-Boundary Innovation Lab shows that electricity consumption has increased when tariffs were subsidized. Please go to the next slide, please. In general, there are two types of CapEx subsidies for mini-grids. One is tender, and the other is results-based financing, or called RBF. We found that at least 8 African countries have implemented tenders to introduce solar hybrid mini-grids in the continent since 2019. On the other hand, there are still limited number of cases of RBF. But according to the discussion with the developers, RBF may be more simpler or more straightforward to use. But please note that the developers may still require financing after financing support to achieve early milestone, as financing is disbursed after completing installation. Today, the largest RBF program is in Nigeria's performance-based grants, and it attracts a lot of attention from developers and investors. Next slide, please. One of the most important regulation is grid arrival rules that defines how mini-grids are dealt with after the main grid arrives mini-grid. Countries with clear rules offer options, for example, mini-grid operators to get compensation, and or mini-grid developers can sell all the generated electricity to distribution companies. These rules reduce anxiety for developers and investors to avoid risks of their mini-grids to be stranded in future. This is one of the things that governments should put more efforts, because according to our survey, only 15 surveyed countries have such clear rules. However, it is also important to note that even such clear grid arrival rule exists, not all the governments enforce such a rules, which investors and developers need to take into account as a risk. Please go to the next slide. We all know that it is important to understand impacts of mini-grid projects accurately to evaluate whether the mini-grid projects are successful or not. And also, it's important to attract investments. But impacts are quite diverse, and they are not always observed soon after the mini-grid is installed. This diagram categorizes the results of mini-grid project into output, which is mini-grid, outcome, and also impacts. According to our study, at the moment, there is no single impact metrics that is used by everyone, and there is no standardization. But even so, there are some advanced works that other electricity access sectors has done. For example, Google's off-grid solar impact assessment metrics, and also 60 decibels work. Next slide, please. This chart shows that metrics for impact assessment, which are used by more investors in the clean energy sector, which is not necessarily only in the mini-grid sector. those that are straightforward to measure, such as number of beneficiaries as a result of the clean energy projects, or job creations, these are more commonly used as metrics in the impact assessment. However, social impact, such as impacts related to genders or health, those are less used as impact assessment metrics. Possible reason is that social impacts are probably more complex and it probably takes time to observe. And also other possible reason is that impact metrics are used selectively by transactional financing. This goes back to the previous slide, but overall in the mini-grid sector, there is no standardized metrics as I mentioned. But the sector still needs to do the more data collection in order to build more standardized metrics that every stakeholder can rely on. That is beneficial for raising investments, especially from the impact investors, and also from investors that focus on sustainable development goals impacts. Please go to the next slide. I'd like to conclude the presentation with a couple of examples of the recommendations. Firstly, for the governments, it is critical for governments, including politicians, to set clear electricity access targets. Then we recommend they take a least cost approach in terms of what energy technology to be used to provide electricity access. This is important because such political messages and policies give clear message to investors and developers whether mini-grids are considered as important technology in their markets. Another important I would like to raise is for development financing institutions. Mini-grids are not only for electricity access, but also in a wider scope, it's important for the socio-economic development in rural communities in emerging countries. For example, agriculture, health, education, and also gender. When we think about non-energy aspects, we also think that it is important that non-energy access departments in development financing institutions and also donor agencies should collaborate with the organizations or departments that are in charge of electricity access, considering those wider or diverse impacts. I'd like to finish my presentation here because there are many recommendations we have written. If you go to the section 1, conclusions and recommendations of the report, we have stated detailed recommendations in terms of what actions should be taken to achieve universal electricity access at faster speed and at lower speed. And finally, I'd like to thank you to all the organizations who shared insights, information, and also data for us to learn about mini-grids and also to complete this research project. Thank you very much.
Thank you, Take, Amar, and Ulime for the report highlights. We have close to 390 members and a flooding of questions, which is absolutely great. Please continue to send your questions in the question and answer interface box, and we will have the question and answer session at the end. I now have the great pleasure of introducing Damilola Obengi, who is the CEO of Sustainable Energy for All, Special Representative of the UN Secretary General for Sustainable Energy for All, and co-chair of UN Energy. Damilola is also a commissioner for the Global Commission to End Energy Poverty. She was formerly the managing director of the Nigerian Rural Electrification Agency and the general manager of the Lagos State Electricity Board. Damilola, welcome, and the floor is yours.
Thank you, Ruchi. Hi, everybody. I'm delighted to be here with you all today for the launch of what I believe is a much needed and timely research piece. What makes this research particularly timely is the fact that it comes as governments are figuring out how to stimulate their economies in the wake of COVID-19. Yesterday, Sustainable Energy for All released the Recover Better with Sustainable Energy Guide for African countries. The guide emphasizes the critical role of electricity access in economic development and urges governments to create robust policies and institutions in support of electrification through renewables. This includes reducing red tape for project developers and investing up to 25% of their stimulus packages in renewable energy. I am thrilled that right on the heels of this call to action to policymakers, we are here today launching the State of the Global Mini Grids Market Report with Bloomberg New Energies and the Mini Grids Partnership. This report offers the same policymakers and other stakeholders in-depth analysis of the issues and situations that exist in mini grid sectors, in the mini grid sector today. Mini grids are critical to help countries truly recover better and for meeting sustainable development goals by 2030. In fact, this report finds that mini grids can serve an estimated 111 million households with access in the next 10 years across Africa, Asia, and the island nations. What is so valuable about this research is that it consolidates insights from the entire mini grid sector. This is the first time a cross-institutional product has pulled in such vast data and evidence from both the private sector and also the public sector. By creating a cross-cutting collaborative report from all key partnerships, the Mini Grid Partnership has created a definitive guide to the mini grid market. Government can and should turn to the data in the coming months as they consider how to support the sector through their stimulus packages. Among the very interesting findings in this research, the number that jumps out to me is that only 13% of approved mini grids funding is actually dispersed. The fact is 14 funders in the mini grid funders group approved a total of over $2 billion between 2012 and 2020, but as such, only a small fraction has actually been paid out. And this should be a major red flag to all of us today, especially considering that in a market that is yet to mature, developers can not only rely on debt financing for their projects. There's no way we can achieve the scale and speed demanded by SDG 7 with this type of financial standstill, and also primitive procurement models being used to electrify people in developing countries. Yes, funding deployment may be quicker as this market matures, but this is also linked to policy and regulations located in the recipients of these countries. Governments need to take stronger initiatives and promote robust regulatory frameworks that support the development of mini grids. But DFIs and global players also need to listen to governments and embrace new ideas. One of the other report's findings that resonated with me is how it identifies with shifting from procurement methods to results-based financing for mini grids. The research finds that results-based financing is now favored by developers, private investors, because it improves returns, risk of early stage debt, and potentially unlocks capital. And in my experience in Nigeria, this is what we've seen as the most fastest, cost-effective form to actually electrifying people. I'm extremely pleased that the Nigerian government has improved 5 million solar connections in their recovery plan. And this is all going to be done by results-based financing. This should be an example to everyone on the call today. If the largest economy in Africa sees the quickest and the most cost-effective way to power their own people as results-based financing, then we should really take that as an exemplar. Results-based financing is also a model for public funders and donors who are reassured that their money is only paid out once connections are delivered, with developers incentivized to make this happen as quickly as possible. Finally, to meet the universal access challenge, a thriving mini grid sector is critical. We must develop solutions for energy access in developing countries with the country counterparts, instead of taking the lead as the global north and thinking international consultants know better than indigenous people. This also includes making sure indigenous developers are part of all programs, all relief packages, all debt funding programs in the mini grid sector. Diversity plays a key role in the energy sector, and there should be no more excuses on why Indigenous developers cannot participate. Thank you very much for listening. Over to you, Ruchi.
Thank you so much, Damilola, for your inspiring remarks. I'd like to stress the part that you mentioned, that this is truly a cross-institutional product that has pulled in data and evidence from public and private sources. As I mentioned earlier, the ethos of this report really lies in bringing together the data and evidence from several stakeholders and presenting this as a one-stop shop for the latest trends and information on the mini-grids market. With that, I would now like to welcome and turn it over to Vale Shonibare for the high-level dialogue. Vale is the Director, Energy Financial Solutions, Policy and Regulations at the African Development Bank. Vale has over 3 decades of experience spanning Asia, Europe, Middle East, and Africa in investment banking and consulting. Vale joined the AFTB in 2017 as the inaugural Director of Energy Financial Solutions, Policy and Regulation. And this team has established itself as a leading transaction team across Africa, having undertaken several leader ranger roles and launched well-acclaimed flagship initiatives. Vale was also the acting Vice President, Power, Energy, Climate and Green Growth Complex at AFDB from May 2019 to April 2020. Vale, a big welcome to you, and the floor is yours.
Okay, thank you very much, Ruchi. Thank you to Damilola and Nancy for giving us this platform. We are going to have a discussion around the findings from the report. I would encourage my fellow panelists to please switch on their cameras now and unmute themselves so that we can have a quick opening statement from everybody. But just briefly, at the African Development Bank, we are very passionate about energy access and off-grid. We have a new deal on energy for Africa with the aims to provide universal access to our over 600 million Africans without access to electricity. And a key component of that is to have close to 75 million connections off-grid. And a key element will be through mini-grids. So it's worth making the point that we're very much players in this field and very keen to learn the lessons from this report. So without further ado, I should invite my panelists to introduce themselves. Perhaps we'll start with Stephen to just give a brief opening statement.
Hi, everyone. Yeah, great to be here. I'm Stephen Hunt. I lead on energy innovation at DFID, the UK Department for International Development. Now, I've been working on results-based financing with DFID since about 2011. And I've been working on the mini-grids work since our Green Mini-Grids Africa program was launched in 2014. And in fact, if those of you who get the mini-grid partnership newsletter would have hopefully seen the 5 years on update from that. So very excited to see this, this report coming out. I'm looking forward to the discussion.
Yeah, my name is Lolade Abiola. I am the head of the mini-grid components for the Nigeria Electrification Project, which is being implemented by the Rural Electrification Agency. I'm really excited to be here. I think it's fantastic to see that, you know, we're all slowly coming together and, you know, the various key stakeholders to make this sector grow and really develop both internationally and locally are saying the same things. And it was very, very welcoming to see that a lot of key points that were made and the recommendations suggested are actually things that we in Nigeria are actively working on. And, you know, I'm excited to start the question and answer session because I think there are a lot of questions that are being raised and a lot of points that were brought up in the recap of the reports that, you know, I can say, you know, because we're actively working on it, can provide some more insight into. So really excited to be a part of this. Thank you very much.
Okay, thanks, Lolade. Jody, please go ahead and introduce yourself.
Hi, everyone. Good to be here. I am Jaideep Mukherjee speaking to you from New Delhi today. I lead Smart Power India, a subsidiary of the Rockefeller Foundation, which was established 5 years ago to support the ecosystem for mini-grids, develop policy regulation, and advance business models, and propagate the best practices, not just in India, but to the mini-grids ecosystem around the world. and very excited to actually go through the report, which has pulled in the landscape from all parts of the world and the best practices. And there are some excellent recommendations here. So I'm looking forward to the chat today.
Okay, thanks, Judy. Jessica, last but not the least.
Hi, Wally, thanks for the introduction. I'm Jessica Stevens. I'm the COO for the Africa Mini-Grid Developers Association. We are a trade association that represents private sector mini-grids on the African continent. And we sort of sit at the nexus between private sector operations and growth in the mini-grid sector, and then working with the donor community and governments on effective policy and regulatory frameworks to grow private sector participation in the off-grid sector and increase access to finance for focus on private sector, but more broadly to scale mini-grids across the African continent.
Okay. Thank you so much, Jessica. So we'll get straight into the question and answers. I mean, something that has struck me is that a lot of the players in this field are still the DFIs and the impact investors, and we're just beginning to see participation from the commercial investors. So what will it take to make mini-grids actually sustainable in the long run and to attract, you know, commercial investors? Perhaps we should start with Stephen, because I know DFID has been involved in trying to kickstart a lot of mini-grid programs across the continent. So Stephen, please go ahead.
Thanks. Yeah, I mean, the mini-grid funders group, we've obviously got a really, ongoing dialogue with many of the private financiers. And in fact, Cross-Boundary and a group of those last year, I think it was, pulled together a statement on this. But basically, I think the bottom line is that on their own, with zero subsidy, mini-grids rarely work, in the same way that rural electrification doesn't work. So you need, in order to have an investable sector, somebody has to be able to take up that viability gap one way or another. So there is a viability gap if you're going to reach poor households. So who's going to pay for it? And I think where we've seen systems, where we've seen reliable systems coming into with subsidy or with results-based financing, then you can see the private sector, the private investors, obviously much keener. I'm sure we'll come on to it, but the challenge is that just having one results-based financing program doesn't solve it. Is that big enough? Is that long-term enough? And is it well enough sort of embedded in the policy and regulatory environment? Because it's no good having a contract with a donor for results-based financing if you're not sure if you'll get your license, or if you're not sure if your tariff is actually going to be even approved, let alone perhaps reversed a couple of years down the line. So I think it's that kind of clarity, that investors are looking for, so that they know what the gap is, they know what the returns are, how long the mini-grid's going to be there, and then they can start to make a case. And I think I'm actually quite encouraged about the amount of private investment that's come in recently to some of the leading players, quite often industrials, Japanese trading houses, and so on. But I think it's indicating that the interest, I think, that's there.
So just a brief follow-up on that. You mentioned the policy and regulatory environment. In terms of policies and regulations, what do you think are the key ones, the priority ones that need to be in place to really get the market going?
I think, it's hard to get away from the issue of tariffs. It always comes up everywhere. Mini-grids are talked about, tariffs comes up. And I think this is where, there's some really interesting work upcoming with the African Forum for Utility Regulators, trying to look at tariff settlement tools, across different countries. And I think there's often a misunderstanding about comparing a standalone mini-grid tariff with the grid tariff, which is often, as we know, not actually the cost-reflective tariff, without any of the cross-subsidy that's associated with grid tariff. So it's about recognizing, I think, that mini-grids are the least cost, and then what as a government or what as a policymaker do you want to do about tariffs? Because it's still the least cost. And just because you connect the grid and charge a low tariff doesn't mean that's the real tariff. I think that's the challenge. So that's it: tariffs, grid arrival. I think the report captures that quite well. You can't make a financial case if you just don't know how long you'll be there, if you don't have any good visibility on that. And then I do think planning and licensing is very important. You know, if the licensing processes are unclear, if you're not quite sure how long it's going to take, if you'll get it, if there's not a clear grid plan, I think this is actually one of the weaknesses, I think, with some of the open RBF programs, is governments and utilities get very nervous because they don't know where the mini grids are going. So that there's a mutual nervousness about that. And of course, it's no use for a mini grid developer if the grid happens to turn up. You know, so that kind of thing just needs to be resolved. So licenses and planning, I think, are the third issue, key one.
Okay, great. So this is a good time to go to Lolade, who is implementing the largest mini-grid program in Africa. You've had quite a number of things mentioned, such as subsidies, such as tariffs, such as providing certainty for investors, results-based financing. How is all that coming together in the Nigeria program? And what kind of lessons can we draw? I think you're on mute.
Thank you very much for the question. And I think Stephen raised some very, very interesting points during his discussion. I mean, for us at the Nigerian Electrification Agency, the Rural Electrification Agency, and also just generally with the regulator, we came up with the mini-grid regulations in 2017. And through many consultations with different developers, private sector financiers, and other countries in Africa, we've been sort of encouraged to note that those are one of the very strong regulations within Africa that really support the developer and hopefully go quite a long way towards giving the comfort to financiers when it comes to compensation for mini grids developers when the grid does eventually arrive, and providing somewhat of flexibility with regards to setting tariffs, because under the regulation, you have the opportunity to have a sort of willing buyer, willing seller discussion with the community in order to agree on a tariff that works for both parties. And also within the tariff calculation tool that is used, there is also a component that has been inserted for grants and how that can be incorporated with regards to setting tariffs. I do understand as well that obviously there's still some uncertainty in regards to how long would it take, to be able to eventually sort of get your licensing and permits. But those are some of the things that we're working on under the Nigeria Electrification Project. And like you said, I'll just give a brief overview of the project that I'm currently running. So we have two subcomponents of the mini-grid components. We have the minimum subsidy tender, which sort of follows your traditional procurement, the rules, and then the performance-based grants. Now, both programs were launched last year, but we seem to have had a lot more traction with the performance-based grants, which is more down the RBF routes. Basically, since August, when we really started receiving applications, we've commissioned 3 mini-grids. And so far, we have 112 projects with hopefully to connect 65,000 connect households. And that's in the space of about 6 months or so. So just a brief overview of that. Things are moving quite well on our side of things. And with regards to really testing out the regulation and testing out how quickly licensing and other sort of permits are coming out, we already have a team inside of NERC that also helps to facilitate that. So really, this program is the pressure test to really see how quickly we can move with regards to providing licensing and permits, and also really test out the regulation and then go back and see how we can make things better and improve it for developers.
Okay, thanks very much, Lolade. In all of these conversations, there's so many of these webinars and conferences, but we hardly ever hear about the local communities, the guys that are actually receiving the electricity at the, at the receiving end of the service. So I'd like to bring in Jadip to talk to us about the experience from India and how you get the local communities involved, how you mobilize them, and what sort of case studies are you seeing from there in order to make this whole exercise sustainable?
All right, yes. Of course, the local community is absolutely critical to the mini grid operation, and it actually begins even before you build the mini grid. Particularly during the build stage, involving the community influencers is critical because in terms of finding the land, and particularly the laying out the poles and wires, basically the distribution network, you would often go across somebody's land, plot, etc. And there are conflicts that arise. And having the local community on your side, particularly the influencers at that stage, is critical to resolving those conflicts and speeding up the execution of the mini grid project. One of the other tactics which people, good practice people use is employing, labor from the local community in the building of the mini grid itself. There is another very important role, which is of de-risking the mini grid operations or mitigating the risk, particularly to the assets and the electricity supplied itself, basically theft of assets and theft of electricity. And some of the tools that mini grid operators have effectively used, one is community free street lighting that is provided. It builds the stake of the community with the mini grid. And often recruiting customer service agents from the local community, which again is a big help in the operations, as well as de-risking the mini grid assets and the theft of electricity, potential for theft. And last but not the least, which is directly impacts the mini grid business model itself and integral to the business model, is the activity of promoting local enterprises, particularly who use electricity. So supporting local entrepreneurs to expand their business or help new entrepreneurs start new businesses, which directly impacts the local economy, as well as it's a direct win for the mini grid operations because that helps grow the demand for electricity. So these are areas, these are some of the actions that the mini grid operators can take, as well as the positive results of the community, which are absolutely critical for the mini grid operations.
Yeah. Thanks, Jaideep. I just wanted to pick you up on a point you made there, and the CEO of SE for All, Damlola, also made that point about how you get the local developers involved, the local content aspect, because that's something that we see a lot across the continent, where government ministers, etc., insist. Do you think it should be left to the market to just get the local business community involved, or should government legislate for a percentage of local involvement on some of these large schemes? Well, what's been your experience?
I think it's absolutely unnecessary to legislate anything on that side, because every business which operates there recognizes the vital role of the community for their business. So I don't think you should restrict it through legislations. If you don't engage the community, your business is not going to work. So the incentive to engage the community is extremely strong, does not require legislation.
Okay, thank you very much. So Jessica, looking at the private sector angle, working with the private sector, apart from the government-led initiatives, what have you been encouraging your members at the Africa Mini Grid Association to drive this industry? And also, what sort of industries do you find benefit mini grids in terms of productive use and the whole sustainability argument?
Thanks for that question, Wally. I think ultimately, I wouldn't say that AMDA is leading the developers. I think the developers are doing quite a good job on their own, working on productive use at the community level. Ultimately, the these systems only become financially viable when you have a base load that allows for that allows for lower tariffs. And so the productive use aspect of all of the companies that are operating mini grids is actually sort of built into the business model. And I think the areas where you see mini grids most efficiently are around agro-processing and fisheries. And those are particularly important to the mini grid sector because they consume power during daytime hours. So often for household consumption, the peak hours are in the evenings, which is relying on battery power, and you have a better distribution of the generation assets if you're able to balance that with business consumption during the day. But I think ultimately this goes back to something that Stephen was saying. The productive use is absolutely essential in order to maximize the utility of the mini grid and to redistribute where the cost lays. And so right now, mini grids don't function on a commercial basis without subsidies, and they're probably not going to for the foreseeable future. But the way that you move away from an endless subsidy in the mini grid space is by growing that base load. And that tension between who bears the cost burden for power, I think the productive use lies at the center of that. Right now, the cost burden lies with the consumer in most markets. And we collectively have decided that cost reflective tariffs are essential for the market, and we're subsidizing on the CapEx side of the business. But there's a tension between, what is a viable tariff for the poorest people in the world, and how you lower the consumer pricing and subsidize that. And what we're seeing with some preliminary data on tariff reduction out of the Cross-Boundary Innovation Lab is that if you can bring down the consumer pricing on a tariff, then you'll see an improvement in the consumption patterns, both for businesses and households. And over a period of time, you'll be able to reduce the subsidy that's needed. And so ultimately, that productive use business at the community level is essential for improving the financial viability of the mini grids.
Thanks, Jessica. And on that point, I just wanted to, raise this question around how you encourage more of a symbiotic relationship between the off-grid players and the grid-based players. So, for instance, you have your local utility, and then you have your off-grid, and in some cases, they may see themselves as competitors. How do you get them better integrated in order to get the optimal result, Jessica?
It's a very complicated question that we could probably spend hours talking about. So I think that depending upon the country that you're thinking about and the way you think about grid integration, they are and they are not competitors. I actually don't think that any of the mini grid companies that we work with view the utility as a competitor. They view the utility as an ally in reaching universal electrification. I think part of what you see in a couple of markets with this tension over grid encroachment has more to do with the fact that governments are being highly incentivized to build out grid infrastructure, but the reality of that extension is that it's not economically viable for the grid. And they see mini grids appear, and because those mini grid companies are doing a lot of work at the community level to improve the village economies, the grid then sees that as a potentially more viable market. And I think that the space for actually creating that integration is first, as Lola Day said, creating a good grid integration framework that allows for transparency for the private sector to understand what happens if the grid does arrive. But I also think a lot of that work is within the government and within the donors that are supporting the government to really create robust least cost option for electrification plans that allow for a symbiotic relationship. There's a lot of work that mini grid developers are doing on growing the load and productive use work that the grid could utilize in the peri-urban areas to grow consumption there and focus on the densification in those areas, while mini grids really work in the areas that are further from the grid, and even with that productive use, don't really make financial sense for the grid to extend to. So it's a combination of all of the actors working in a symbiotic way.
Thanks. Does anybody else have any comments on that? I don't know if Stephen wants to come in here.
Yeah, maybe briefly. I think, you know, I'd like to hear from Lolade on this really, because I think Nigeria is doing so much right in this at the moment, in terms of setting up, because there's so many links in this chain, you know, all the way through from the regulation, all the way through to the financing, the project development, the community engagement. You know, there's so many places where it can go wrong or right, and we're trying to build up this value chain, which, you know, which really works and which delivers at increasingly low costs, generating more and more benefits. So I think the utilities, it's going to take a mindset change for them. I think, you know, so many of them are essentially monopolies. We're talking about monopoly situations in which they need to start, in which it's hard, I think, for a lot of them to think about mini grids not as private sector competitors to their monopoly. And I think one way or the other, they need to come out of that mind frame, either because government says, no, we want to create this space, you focus on the grid, stop not continuing to serve these rural areas and let another solution have a chance, or we need utilities to actually start more actively engaging in mini grids. And I think you see some doing that, and it's somewhat controversial, but I think, you know, things like the KPLC participation in Kenya and COSAT, that's an indication of where a utility might start essentially to do more in the way of mini grids. There's also some new initiatives like Connexa in Nigeria, which we're exploring, which are kind of a next generation of utility who, you know, from the outset are saying they want to take the least cost approach and recognize that that's going to involve the grid, mini grids and household solar, rather than only pursuing one approach. But I do think that one of the other problems is sometimes it looks like you know, the country's, you know, ready to go with mini grids, but then what you actually find is that there's some, you know, essentially kind of vested interests in that monopoly, or in the idea of monopoly, which mean that actually the process is a lot slower because there's so many links in the chain where it can be blocked. So I think that's another thing I think for, you know, for us all to think about really is can you be reassured that there is that kind of that willingness and that clarity for the stakeholders kind of throughout the chain, because that's in the end what I think is needed. But anyway,
great. Okay, Jaideep, do you want to give us some experience from India?
Yeah, absolutely. So India's a situation where all the mini grids are present where the grid is also present. And, you know, I mean, right now, the integration of mini grid and the grid has not taken place, though a couple of states have a policy and a regulation laid out. But that's not happened. But the very interesting situation is this, that the mini grid companies are providing such excellent service to their customers that the customer payment behavior is 99% on time payment behavior. While in contrast for the grid, you know, often it hovers around 60% collection rate. And a lot of it has to do with very poor practices of the, you know, state-owned utility in terms of not being able to bill correctly, not delivering the bill on time, and not having responsive customer service. And one of the potential areas when is in a future scenario when there is integration, where in a scenario where the mini grid operator is pumping electricity into the grid, but mini grid operator can play a further role of acting as the last mile franchisee, delivering metering, billing, collection, and the customer service, which most of the utilities fail to deliver, and a source of problem. In fact, from all our learnings, there are 2 state governments we are working with, where we are just bringing this knowledge to improve the last mile services purely of the grid itself, because the whole infrastructure is there, the generation capability is there, it's just not delivering. So there are a lot of you know, learnings and benefits of how to service customers, which can be brought to the utilities, particularly in markets where utilities are not performing well in delivering their services.
Right. Yeah, I like what you said about the role of the mini-grid provider as a last mile franchisee. I think, you know, that's a very interesting role. And also the fact that they have 99% you know, payment rates, which is quite impressive, as opposed to 60% from the on-grid utilities. So Lolade, are these lessons similar to what you're seeing in Nigeria?
Absolutely. And just to touch on some of the sort of the key points that were raised when Stephen was speaking, indeed, there are a lot of links in the chain, and it takes a lot of dedication and drive to really ensure that, you know, we're working, you know, simultaneously within all these areas to ensure that, you know, that we really do achieve our electrification goals. And I think definitely you know, the government drive is there, and we really do want to continue this. The good thing about Nigeria in such a way is that, you know, our electric, the sector is privatized. So for example, the discos are private entities. And you find that, you know, it's not so much as the government providing them with funding or pushing them to extend the grid to these areas that don't have electricity. However, they themselves are looking at it and realizing that, well, it may not be to their benefit. It's too expensive for them to extend the grid to some of these areas. And so we've been having a lot of engagements with them. Obviously, as with new things, initially there was a bit of pushback saying that, oh, you guys want to encroach in our space. But with, you know, with the support of NERC, the regulator, and the mini-grid regulations, which basically is saying that, look, these guys are going into communities that you would not ordinarily go to. They're doing their community engagement, they're gathering data with support from the REA, they're getting their funding, and they're going in there and they're building and providing power to these, you know, communities that are within your franchise area that ideally you should be going into. And so what, you know, the regulation helps is to say, look, you know, ensure that the mini grids are built to grid code. So in the event that the mini grid, in the event that the discos, the distribution companies decide to go into those communities, there is, you know, they've already sort of stimulated demand for electricity. And so it's easy to have that conversation. And so what we're finding now is that a lot more of the distribution companies are very, very open to discussions. For example, under the performance-based grant, we have a few developers that have come to us to say, we've identified a few communities, but they have some level of distribution infrastructure in them, albeit maybe they're dilapidated. You know, where do we go from there? Speaking with the regulators, they're saying you need to engage with the distribution companies in order to ensure that, you know, this isn't some community that they intend to go in the next, you know, say, you know, year or so and try and negotiate with them. And so we already started having those conversations with them, and they're saying, fantastic, this is great. You know, we're happy for these mini grid companies to go ahead and go into these communities. And, you know, let's focus on those sort of peri-urban and those urban communities and locations that, you know, that already kind of are connected, but maybe the electricity isn't as stable as they want. So, I mean, in the whole, like you said, our program is the test case. We're really using it to push and try and see where all these holes are, and then, you know, use the data, use the sort of the developer information to be able to test out the regulation, test out the collaborative nature of the discussions with the DISCO, you know, to test out, you know, what is it that the financiers really want. And I think as a government and as a country, we've realized that, you know, with the performance-based grants, the result-based financing, that sort of helps to level the playing field as such. I know JD was sort of talking about the fact that there is no real requirement to legislate sort of a participation from local indigenous companies. And we found already that, you know, as opposed with the minimum subsidy tender, which is more procurement, with the performance-based grant, you know, we have, for example, out of the 17 developers that have brought forward the 112 sites, you know, 15 of them are indigenous companies, and, you know, they're coming with their little portfolios, and it's really encouraging to see that. And then we have the private financiers that are also looking at some of these companies and sort of considering sort of providing support to them. And so we're trying to sort of harmonize and really sort of tie in all the key elements of the SD4O recommendations to see how we can use global, local and international players in financing and regulation to really, really grow the sector. And I really do think, in Nigeria, we are excited. We know that, there will be some challenges along the way, but we know that the market is there, and that, definitely we'll be able to move forward and reach our electrification goals.
Okay, thanks very much, Lolade. As we close, can I just invite each panelist to give just 1 minute your crystal ball gazing of how this sector is going to evolve over the next few years, with or without COVID. Just give a 1 minute synopsis. So we'll start with Stephen.
I knew you were going to start with me. Crystal ball. I think it's not all going to happen at once. It's going to happen. Certain countries are going to just streak ahead. I think once the engine gets going, once you have things lined up, once the industry isn't there straight away, these things do take time. I think some of the disbursement challenges that are mentioned in the report, some of them are hard to overcome, but once you're in position, then you should be able to really roll it out. And I think we see that hopefully Nigeria, we also hope Sierra Leone, some other countries might really achieve some critical mass. And I think once that experience is there, once some companies have very large distributed portfolios, I think this sector will really take off, because then those will be distributed utilities, essentially operating mini grids, and it'll be much more standardized, more sort of potato stamp. We know how to do this. We've got some volume now. We know what the tariff situation is. I think that's where we need to get to, and I hope places like Nigeria and that kind of alignment of public and private to make it happen. Sierra Leone, other places. I think that's where we need to see the proof points, which then will encourage other countries will move quickly after that. Thanks.
Great, thanks. Jessica, please go ahead. 1 minute.
Thanks. I'm gonna go with the optimistic version of the future, and I'm not gonna involve COVID in my dream world, but I think the hope is that we actually are able to create, an integrated bidirectional network, and for communities and places that will never be financially viable for the grid doesn't interact with those, and I think we do create, a policy and regulatory space that does allow for some interconnection with the mini grids to be able to continue to sell power into the grid. And all of that is done in a way that reflects both the least cost option for electrification and the service utility and longevity of the sites, which is the space where I think we're missing in the long-term planning right now. But ultimately, I think private sector is really poised to massively increased scale. We've seen I think 200% increase in mini grid deployment in the last year and a half from private sector. And if we can create the right concessional environment through the right subsidy frameworks, those same developers and many, many new developers are looking at really improving energy access and growing their operations across the continent. And I think we're just at the very beginning of that curve that would allow private sector to be the mechanism that, as the report shows, can actually electrify half of Africa. But that subsidy component is going to be essential in ensuring that growth trajectory.
Fantastic. So private sector is the engine of growth. Judith, please give us your prediction.
Yes, thank you. So all of us here recognize that, and particularly the report further amplifies that, for the off-grid communities, when you look at Africa, 600, 700 million people who do not have proper electricity access, what will get them there the fastest and at the lowest cost? And I think technically it is established that mini grids can get there at the lowest cost, as well as fastest in terms of time to execution and delivery. So there is very strong evidence of that vis-a-vis the grid cost and time to delivery. Now, in spite of that, why is this sector not scaling up? Why is funding that is available cannot be used? I believe the challenge is not the enthusiasm of the private sector or even the funders or the nature of subsidy or grants, but I think it is at a much higher level, that the narrative that we understand about the mini grid solution being the lowest cost and the fastest, that narrative is still not ingrained in the highest policymakers' mindset. And that is the biggest challenge. If you have a market, if you have a country where 60% of the country does not have access, there is no grid there, then why isn't a master plan created as to where the grid should go optimally and where the distributed solutions should be allowed to go in with a clear long to medium term rules of the game, which is basically policy and regulation laid out, so that the private sector and the financiers and the supporters of mini grid understand what is the play field. Because without that, piecemeal subsidy, whether it's result based or any other thing, is a support. And that's why some of the activity is there and the proof of concept is being displayed. But without that, the mini grids will remain in this domain of extremely high risk and modest to low return business model. And that is what, if you want to unlock and change, game change, then what we know in terms of evidence has to be, the narrative and the mindset at the top policy-making level has to change, whereby you lay out a master plan and a policy and a regulation, which is the real act of market making that the governments can perform. And then the DFIs, funders, the developers, and the private sector can unleash their potential, their knowledge, the innovation, and the creativity to make it, scale it up and make it the real game changer that we believe it is in terms of
fantastic.
access.
That was a bit over 1 minute, JD. So Lola, you used up your 1 minute, so you have to be very quick.
I have like what, 7? So okay, I'm gonna just go really fast. So I'm going to go based on our experience so far on the project and the trends that we're seeing. It has been slow at the beginning, and it will continue to be slow for a few more months, and then it's going to grow exponentially. I really 100% hand on heart to believe that, because a good example, I'll touch a little bit on, for example, disbursements. Like I said, it's a little slower on the minimum subsidy tender side, which is more traditional procurement, but on the performance-based grants, we have seen a lot of interest. It started off slow initially with companies bringing 1 or 2 sites just to test the system. There's sort of that hesitant that is this really going to work? We asked for environmental and social requirements, technical designs and things like that. And so what we found is that all of a sudden, when a few companies have gone through and scaled through with one project, on average, we're getting 5 to 10 projects a week from multiple developers, and it's growing. And so the disbursement, it's a little slow as well, because, you're giving time for these developers to build their mini grids, and sometimes, it'll take a few months to do that. And especially with COVID, things are a little slower, but we really do think by the end of this year, disbursements are going to pick up. The interest will pick up, and we know that as well will attract the commercial financiers to come in, because we have a lot of them asking questions. They want to see our projections. They want to see how things are moving, and we're very open and transparent with them. And we have collaborative sessions with both the developers and the financiers to really say, we as a country want this to be a private sector driven approach, because we can't do it as a government on its own. So I really personally believe that before the end of this year, things are really going to pick up. We'll probably hit some bumps along the way, which hopefully, everybody has the right mindset to try and, address. But I'm very positive for the future of mini grids being the tool with which to increase access to electricity.
Fantastic. Good to end on an optimistic note that COVID or without COVID, we are set for significant growth in this sector. So I'd like to thank all the panelists for your very insightful contributions. I think we've had a really good discussion, so I'll hand over to Rushi to guide us on next steps. Thank you very much.
Thank you so much, Wale, Jessica, Lolade, Stephen, and Jaideep for this riveting discussion and also for being great champions of the sector. We remain greatly encouraged by your commitment to the sector. I would now like to kick us off for the question and answer round and also give our panelists from the high-level dialogue a bit of a break while we take some questions, particularly around the report. So Takehiro, there are quite a few questions that are coming up, and while we may not be able to go through all of them today, we did want to pick up a few that I think were posed by quite a few people. So two questions that have come up. Take, if you could speak to any good example or, sorry, I'm just popping this up. So any details of a country or a good example that has successfully tackled the question around how they've tackled the whole issue of revenue stream of mini-grid developers when the national grid arrives. A second question for the BNEF team is also around, were you able to quantify the share of mini-grids that have a connection to the grid as a backup? Or are the share of mini-grids that are suitable for a future potential? So if I can hand it over to you, Take, there.
Thank you. For the first question, so actually when we studied in this research project, there are very limited cases that actually the isolated mini-grids were reached by the main grid. But in generally speaking, one of the countries that have robust regulations for the grid arrival is Nigeria, because the government offers 3 different options. One is compensation, another is operating mini-grids while or selling excess electricity to the main grid. And the third is completely operating the mini-grid assets in parallel. I have a relatively less knowledge, but I heard that Cambodia is one example that actually the isolated mini-grids were reached by the main grid. However, the operators got compensation from the government. On the other hand, we also heard about a challenge where the mini-grid arrival rule even exists. For example, in case of Tanzania, a few developers told us that their isolated mini-grids were nearly reaching by the main grid. And then by rule, the mini-grid operator is supposed to have compensation. However, the government, state-owned utility, is reluctant to accept the tariffs that of mini-grid operator are supposed to receive. So that is a little bit a challenge for the developers and also for the investors who are thinking about new projects in the country. For the second question, the simple answer is no, because for our calculation, we assume that, so in our calculation, we had big assumptions. One is the population density. So we assume that low population density areas in all the countries we targeted are suitable. And also, secondly, we assumed a household income level to consider which technology is suitable to provide access. Is it mini-grids, is it solar home systems, or is it grid? So as a ballpark calculation, it didn't consider the grid actually arrives those areas. However, at the country level, especially for India, the main grid has reached in many parts of the villages, and then that makes it a bit challenging to calculate actual potential size. But on the other hand, grid access equality is still challenging. Therefore, it's sensible to think that even though grid reaches, still there is a potential or big demand for the mini-grids to access reliable electricity, especially for the small C&I customers.
Thank you, Take. And one more question which came up, which is, what is the expected level of service according to the multi-tier framework for the proposed mini-grid investment levels? If you can speak to that a bit.
I think, So based on the World Bank SMAP multi-tier framework, I would say 2 to 4. So again, it's we didn't divide the population group by tier group. It's more based on the population density and household income. That was used to assume how much electricity is used at one household. But if we consider the level of the electricity consumption per year per household in the areas where mini-grid is suitable, I would say tier 2 to 4 would be the probably most accurate way to say about which tier levels would fit those households.
Thank you, Take. If I can also bring in Jessica from AMDA on the whole aspect around interconnection of mini grids to the main grid. Jess, I know you've done a lot of thinking around this, so would be great to hear from you on this.
Thanks, Ruchi, and I'll make this brief. I know there's quite a lot of questions. Yeah, I think that one of the things that we're seeing with the grid integration frameworks is that there's a gap between what is actually written in legislation or that's regulated and the implementation of that. And so one of the spaces that that AMDA is working with governments on, and that we are also hoping that other stakeholders within the sector are working on, is actually the process for how that actually works. So you can have a great integration framework that spells out the financial mechanisms for a mini grid to be paid out. But unless there is clear transparency on the responsible parties and the mechanisms for how that works, often you get stuck in a space where the Rural Electrification Agency is saying, please talk to the utility, and the utility is saying, well, we don't have money to pay you, so please talk to the regulator, and you're stuck in a circle, even though it's very clearly written in the regulatory framework that there is a compensation mechanism in place for you. And so one of the overarching things that's really important in the regulation, and as we think through this, is not just how wonderful the structure of the regulation is, but how it's actually implemented and who the authorities are that are pushing particular aspects of that.
Thank you, Jess. Lola, if I can bring you into one of the questions that has been posed, which is really around the role of the government in the sense of filling up the viability gap. Do you think there are ways where the government counterparts can be proactively involved in developing these mini grids and still have a viable and a thriving private sector involvement without a conflict of interest? Would be great to hear from you, but also looking at both Jessica and Jaideep to chime in.
Thank you, Rishi. I think on the side of the government, it's very clear that we have decided to utilize a private sector driven approach to supporting and developing mini grids. And as we all know, there is a viability gap, and what the government has done on their side is really secure the loan, basically, and secure the financing that's required that would to provide grants to these developers to really plug in those holes. So not necessarily looking to be an active player in the market, but really trying to support private sector, because we know it's really only through private sector that we will move it as fast as possible, and we'll sort of carry out the right sort of due diligence and ensure that these mini grids are sustainable in the long run. So encouraging things such as productive use, which is absolutely critical for the long-term sustainability of these mini grids, and sort of ensuring our regulations are strong. And as Jessica said as well, because we're able to sort of source the loan and the grants for the developers, we will be able to then bring in sort of hundreds and hundreds of applications to be able to really test the regulation and ensure that if there are some holes in there and sort of areas that for implementation don't really work out, we have more than enough test cases to be able to really try and resolve those issues quickly. So I think it's really sort of more of a willingness to provide the enabling environment to allow for the mini grid sector to really thrive under sort of having a private sector at the forefront and government agency really just supporting on the back end and ensuring that we use this medium to meet our electrification goals.
Thank you, Lola. Jessica and Jaideep, wondering if you have anything to add here.
Okay, so in situations where you know, a mini grid model may not be, intervention may not be viable to implement by a private sector due to remote location, geography, or a very small population, the government could invest in the mini grid capex, and the private sector can operate it. I mean, it's like a leased model where the private sector can operate the asset and the government can build the asset, particularly in situations where it may be a geographical area which may not have a commercial viability.
Thank you, Jaideep. One question, Jessica, that's coming up and has come up repeatedly is around the productive uses. I saw your response on the chat window as well, but if I can again bring you in to speak to the fact that we haven't seen a lot of donors as well as, I would say, private sector that is looking at the end use development. So wondering if you can give us some examples or good practices in the sector where you may have seen this happen. And Stephen, would love your reactions here as well.
Yeah, sure. So I think the way that productive use is funded from the donor side, and Stephen, correct me if I'm wrong, but is that they're operating through third-party entities. So Energy for Impact is an organization that's working in East Africa to help with productive use. And the funneling of donor money into organizations like Energy for Impact or the Innovation Lab allows that institution to work across multiple developers to try and figure out what are the mechanisms that allow for a rapid economic growth on the back of productive use and economic stimulation. And I would say that I don't think we have the answer, but we do have a number of organizations that are trying to figure out how we do it and then create a best practices baseline. And then on top of that, you have a number of companies that are also doing that same exact work within the communities. And some of it is built on the back of funding from Energy for Impact, or I believe that NDEV was doing work on this as well, that allows, that stimulates different aspects of the economy and that's more nuanced and that is driven by the need to improve the load. And so companies like PowerGen and RV Soul and Standard Microgrid and Haven Hill are all doing work at the village level to be able to grow the load. They're all doing different kinds of things. Some of them are working on water and sanitation projects. Some of them are working on agricultural development. Some are working on refrigeration. And I feel like I've singled out 4 companies, but I actually don't know of any companies that aren't doing some level of economic engagement because it is so essential to the business model. And in many ways, it's why mini grids are so much better than many of the other options, because they're structurally incentivized not only to provide power, but to be able to make sure that that power is maximized in order to see their returns.
Thank you, Jessica. Stephen, if I can bring you in to react to this, because I think DFID's one of the few donors who looks at pretty much the entire chain of financing, not just mini grids, but the entire energy access space. So wondering if you have any reactions here on the productive use element.
Yeah, I think it's become more and more into focus as more and more mini grids have been built. I think that's the good news. I think the first challenge was getting them built, connecting people, and then I think people were looking at the load profiles and saying these are not going up as quickly as we need, because nobody's actually really talked yet about demand risk. So demand risk is a big factor. So who's the one that's responsible if people don't use very much and don't buy very much? I think a lot of the RBF discussion is quite static. There's a static tariff we're thinking about. There's a static, result subsidy, but actually the amount of subsidy needed varies quite a lot, as we've seen with the productive use, with the density of the village. There's a lot of factors. And with productive uses, that's another. It's obviously it's intrinsically connected with rural development. Is the rural economy, got enough money in it essentially to sustain a power system? And often, of course, the reason we're going to these villages is because they don't generally. So I think it's actually a really positive bit of developmentally as DFID, as a donor, we care about the electricity, but in the end, we care about the development of that town or village. And so I agree, it's a really positive spin-off of having that a capable entity in that town or village, which is providing power. And if they just sit there and hope that, you know, more things will happen, I think they eventually will, but it'll happen much more slowly. So I think what we're trying to do with things like the Powering Renewable Energy Opportunities program we're co-funding with IKEA is really just funding innovations and new ways of working, especially joint ventures and partnerships between mini grid developers and, you know, ice makers, or you know, milling companies, or you know, often, or rural development agencies, you know, who are doing wider training, or, you know, mini industrial parks, you know, on mini grids. There's a lot of different ideas out there which also need financing, which also need connection to markets. But yeah, I think it's a really positive direction. In fact, in the Sierra Leone program, we've just financed a whole round of community-led projects on productive uses. You know, in those villages, we said, okay, you've got the connections. You know, let's open up a round of funding to help people augment businesses, start businesses. You know, there's a really interesting cohort of projects there, and we're, you know, so we're hoping to see those develop over the next few years. But that could provide some really interesting insights, and very locally led, which I think is another key benefit.
Thanks a lot, Stephen. Jaideep, I'm wondering, because I know Smart Power India has been giving the demand stimulation aspect a lot of thought as well. Wondering if you'd like to come in and react around this. And I know you also have quite a few examples on hand on where this has been done well. So would love your reactions here too.
Yeah, I actually, you know, what Jessica spoke of, that the mini grids have a structural incentive to, you know, support local enterprises and drive demand. I totally second that, and we experienced that in our with the mini grid community in India. But what we also initiated is, what are the kind of activities that work with you know, with the price at which mini grid electricity is available and viable. And therefore we experimented with large set of enterprise activities in rural India, and we kind of prepared business models for entrepreneurs which definitely succeed, and we have kind of published many of those models through our knowledge sharing documents. And luckily agriculture happens to be, you know, particularly irrigation happens to be one of the activities which work extremely viably with mini grid electricity. And so that's, you know, our experience is that there are a certain set of activities which the mini grid electricity at that particular price point fits well and produces profitable and viable enterprises in the local and in the rural communities.
Thank you, Jaideep. Takehiro Uleme-Anamar, if I can bring you back into the conversation and answer to, I guess, two main questions that are coming up. One around the analysis of financing, which thanks to the mini grid funders group is really the first time we're seeing this parsing out of financing data for the sector. One of the questions, Take, that has come up is does the analysis for the financing include only project finance of the mini grids, or also include appliance financing and end user finance? So it would be good to get clarity around that. A second question, which is somewhat more generic, but I understand where this is coming from, is just the cost reduction aspect. So are there aspects, and perhaps sort of going beyond the solar panel reduction, the solar costs which have been declining, but are there any other opportunities for reduction which the industry may not have thought through, which may have come through the research that you can speak to?
Okay, I will jump in first. In terms of the financing data from the mini grid funders group, those funding didn't directly go to the project development. It went to the government first, and then the money was used. Some of the money was used for project development. We have seen about 56% of the approved financing aimed for supporting mini grid project development. So depending on who received that financing at the end, You could also say some of the money was used for the financing for appliances if the fund receivers who are developers implement such business models. Some of the monies didn't go to the project development. Some of the money was used for technical assistance, including supporting the improvement of the policy and the regulation schemes. I think that for the second question, yes, obviously we expected the solar costs and also the cost for lithium-ion batteries will quickly reduce in long term. I think the other opportunity to reduce costs is actually development and also operations. That we stated some of the opportunity to streamline the project development process in the report. For example, as I earlier mentioned, there are some data analytics platforms for mini-grids available on the internet. And then some of those platforms actually assist developers to identify potential project sites, for example, by using the satellite images to identify the location where productive use customers already exist. And also some of the platforms also support streamlining the administrations. There are some technology startups who provide technologies for remote monitoring and controls that supports mini-grid operators to reduce time, which is cost. For example, engineering support also could potentially reduce traveling to rural areas. That reflects to the operation cost reduction of the mini-grid projects.
I'll just add to that point. So what we did find from discussing with these guys is that you could, one huge cost in mini-grid development, actually mini-grid operation. So let's forget the development, the CapEx side for a moment, because actually, like you said, the CapEx for PV is quite low, right? So automatically, once you get enough PV in there, there's enough sun, that's going to bring that down significantly. But one thing we did find is that one thing that's really high and sometimes fairly unpredictable is the OpEx costs. And that could be something as large as, if I have a portfolio of mini grids, let's say I'm located, maybe I'm in Nigeria, I'm located in, I don't know, near Port Harcourt in River State, and I have my portfolio, I've got a project in Kaduna. I'm still, if something goes wrong there and I don't have my remote monitoring set up, it's going to cost me at least an internal flight and time to get there. So one thing that's really important is to have remote monitoring systems where you don't just monitor power usage, but you can modify the connection that you're allowing end users to use. So if they request more, you can turn that on or off, or you can modify your generation system remotely. So you can sort of like control this stuff remotely. And yeah, so we think that operational costs can be reduced significantly. So another example is if you've got, like, for example, power gen operate in different countries as well, right? So if they have a team that needs to travel between, I don't know, Nigeria, Tanzania, and some other location, that all those flights sending people over can cost a lot of money. I mean, another way around that is to have, you can have local specialists, but they have to be trained up. So you have to have capacity building. And the final point there is, we see the RBF as really key to this whole scheme. But when you have RBF, you've got project financing, right? So if you want to access project financing, now project financing is where you lend on predictable cash flows. And a great example is the CBA Tanzania power gen deal. And that's around 60 projects, right? So each project is generating revenue and each project can get an RBF grant. So commercial lenders are more likely to lend on predictable cash flows if you have some sort of large amount of predictable cash flows, not if you have one mini grid. So it's hard to get project financing. on one mini grid. But if you want financing on multiple mini grids, that's more viable.
Thank you, Take and Oleme. That's very helpful. Moving to the last of, sorry.
Sorry, go ahead.
Moving to the last of questions really now, and wondering if I can bring you, Jess, to one of the points that Oleme made around results-based financing, but also get you to react to the approved mini-grid financing that's really been dispersed in the sector. Was the figure of 13% in line with what you expected to see, or more or less? Would love to hear your reactions there.
I think the 13% is about what we expected to see. I don't think any of the private sector mini grids or any of the people that we work with are surprised by that. I think that the number that's actually reached the companies that we represent is even smaller than that, with the recognition that that 2 million is going to more than just subsidizing CapEx connections. But that said, I think the only way that we see massive scale in the sector is actually with some sort of results-based financing facility and some standardization along that platform. And I think to that effort, the results-based financing facility in Nigeria is one of the fastest moving ones on the continent. And I mean, I think as you know, and many of the folks on this call know, AMD has been working with C4All on the Universal Electrification Fund, but some tool like the Universal Electrification Fund that would allow for scale for mini grids is essential. There needs to be some sort of coordinated effort. Right now, what we're seeing is part of the reason that there's only 13% deployment is we're reinventing the wheel in every market. And each new donor is reinventing a subsidy wheel. And we're not really learning from past mistakes on what did and didn't work and what can speed up that deployment. And if we're actually going to reach universal electrification, we need standardization in the way that we subsidize the market.
Thank you so much, Jessica. I guess with that, we unfortunately come to the end of our time for the launch event. Thanks again to all our panelists, Wale, Jessica, Lolade, Stephen, Jaideep, and the audience as well for joining us and for continuing supporting this effort. We will try our best to respond to all the questions that have come our way and we didn't get a chance to react to now. Luckily, we will also continue to have this discussion over the next few months in a series of informative sessions, webinars in the next in the next few months to come. The discussions would focus on country case studies, key topics in the sector, as well as focus on stakeholder briefings. So please stay tuned in for more information. Finally, we would like to encourage everyone to download the report, the case studies, and the database at www.minigrids.org. For any further information, do not hesitate to get in touch with me or anyone on the Mini Grids partnership team. And again, thank you so much.